It has been brutal to be invested in the precious metals, gold, silver, or the mining stocks for the last 2 years. We know that. So when I had the opportunity to speak with Jorge Ganoza, CEO of Fortuna Silver, I jumped on the opportunity. Fortuna is my largest single stock holding. I want to disclose that, but also I want to make sure you know that I was not reimbursed or paid to make this video in any way. This is just myself, a stockholder, and Jorge, CEO, sitting down to talk, get up to speed on what's going on with the company. But what I was most surprised and heartwarmed about was at the end of the conversation, we talked about the care and concern, the benefit that the company gives to the many employees of Fortuna Silver. A lot of their mines are located in very remote areas, and Fortuna is like the only employer in the area. I sensed 100% that Jorge genuinely cares about the employees of the company, the suppliers to the company, but I also sensed 100% that Jorge cares about the investors. Heck, he is one himself. We aren't the only ones struggling with these tough prices in the precious metals. Even the CEOs have challenges dealing with this market environment, dealing with the inflation environment. But I feel 100% confident that when I'm invested in Fortuna Silver, I'm with a quality organization with quality management that has delivered over the years. I hope you enjoy my interview with Jorge. Today, we are joined by Jorge Ganoza, CEO of Fortuna Silver. They are a global intermediate gold and silver producer. Jorge, thanks for joining us today.
Ron, a pleasure to be in your program again.
Yeah, well, hey, last time we talked was shortly after the first quarter numbers were released, and I know just a few weeks ago you put out your second quarter numbers. Any highlights you care to share with us?
Yeah, looking at the first half of the year, our metal production was right along our expectations with respect to what we guided the market with, right? So our gold production for the first 6 months, 129,000 ounces gold, and our silver production, 3.3 million ounces of silver. So this is a business that's driven by physical metrics, and we have delivered the metal that we planned to, and we guided the market. So we're very happy with that. With respect to costs, inflation pressures are real, are here, are biting. But in spite of all of that, we managed to produce at a cost that from an all-in sustaining cost perspective is within the range that we guided at the beginning of the year, right? So production and costs within our guidance. With respect to financials, we generated sales in the quarter of $168 million. Our EBITDA came in at around $58 million. We generated free cash of $22 million. And our all-in sustaining, our net income came at $1.72 million, below market expectations. And I think we were punished by that, below analyst consensus. But you know what? In a very difficult quarter where most of our peers reported income deep in the red, we were able to show and log a small net income. Our net income was mainly impacted by a write-down of ore stockpile inventories, the value of stockpile inventories of ore at our Yaramoko mine. That doesn't mean that ore is not going to run through the mill. It's just that we adjusted the value of those stockpiles. And second, all of our silver, around 6 million ounces that we produce annually, is sold in concentrate. and because of the pricing mechanism of concentrates, a declining price from April to June generated price adjustments on our provisional sales. All of that amounted to around $12 million, right? So that impacted our net income, our bottom line. But we still were able to show figure in blue, a small net income, and strong free cash flow of $22 million, right? So free cash flow from operations, right?
And I think you had, was it mine operating income of almost $30 million during that period?
Yeah, the quarter came in with strong margins on the mine operating income lines, free cash flow, strong EBITDA. No, so the business is performing well, and we're feeling very calm about how our assets are performing in this price environment and with the inflationary pressures that we're seeing.
Right. So you were in an environment in the second quarter where there was some pressure on the metals prices, correct? And at the same time, inflationary pressures were pushing up the cost. But despite that, you were still able to generate a small profit and generate what I would say is pretty significant free cash flow, which I look at as being a kind of a key metric to consider when looking at a company.
Yeah, absolutely. Margins got squeezed for most precious metals producers, if not all. And again, we saw a lot of that with not all, but a lot of our peers in the emerging or mid-size producers space, with a lot of them reporting losses in the quarter. No, again, as I said, we managed to log in a small gain
Right.
in net income, but more importantly, as you point out, robust free cash flow and robust income from mine operations and operating income.
Right. I'm just curious, as you, at your level, as you see the metals prices, which have been under some pressure, and then again, inflationary costs going up, at what point do you think it starts to impact the mining industry in terms of cutbacks in production, companies deciding to pull back on projects? Do you see that coming down the road at all, or any thoughts on that?
Well, we've been there before, right?
Right.
If you look at the cost profile of producers, I would say that on a consolidated basis, most cost producers are operating, with margin.
Right.
But you can identify specific assets in portfolios that operate at $1,800 all-in sustaining cost. What that tells you is that the mine is covering its operating costs, but it's struggling to fund its sustaining capital investments. Right? So what I see is that at this, $1,700-$1,800 price range, there is a small pool of assets out there that are quite marginal, or are becoming marginal with respect to their ability to fund their sustainability, right? So they're not generating operating losses, but they're barely generating cash to sustain ongoing operations. So I believe with $1,800-$1,700, we are at that level, where a small percentage of the asset pool in production is feeling the about to feel the pinch. But $1,800 and $1,700 are good prices. I mean, we all believe it should be 3,000. But
4,000.
The price here is your what you fancy, really. We all think it should be higher, but
Sure.
$1,800, $1,700 is not a bad price.
Sure.
And we see that because those assets on the upper portion of the price of the cost profile are still being able to meet cost and in sustaining capital investments. And as you know, this is a business that's quite intensive on capital every year, just to keep their mines running, right?
Mm-hmm.
So I think we're, to answer your question, we're at $1,700, we're right at that limit.
Right there. But if inflation keeps up, that could have an impact on that scenario as well.
We are, so if things continue moving a bit, we will likely see some mines being placed on care and maintenance.
Right.
We are not seeing that yet, but I think we are close.
Right. I heard someone talking about silver in particular, in that with the recent kind of pullback in a lot of the base metal prices, that a lot of silver, almost 70% of silver, is produced as a byproduct of more base metal mining, and that if these base metals continue in more of the downward fashion like they have, that might also result in some decreases possibly in silver production as well. I mean, I know silver mines are becoming very hard to find.
Yeah, about 2/3 of mine output comes from base metal mines, large copper mines, large lead, zinc mines, no?
Yeah.
That's about 2/3 of world supply. So what we call primary silver producers are the balance, 1/3 of global production. So yeah, now copper price remain healthy, even though we've seen a bit of a pullback. Copper prices remain healthy. There's been a lot of volatility with zinc. Zinc in April was trading at about $1.90 per pound. And by June, it was trading at around $1.45. And I believe right now it's about $1.35. But it's not a bad price for a base metal mine. So I don't think prices are at that level where we'll see zinc production being curtailed at the mine level. What we're seeing is in Europe, zinc smelters being placed on standby because of the rising cost of energy in Europe. And there are some, important smelting centers for zinc in Europe. Okay. So, but that is more on the intermediate smelting phase more than what's happening at the mine levels.
Than the big picture. Well, let's talk about a potential low-cost mine in the future, and maybe shift over to West Africa. The Seguela project that appears to be moving along on budget and on time at this point.
Yes, our team is doing a great delivery there, because we're talking about difficult inflationary environment, costs rising, stress on the supply chain and procurement side of things with global trade and whatnot. And by now we're over 70% complete with the construction, and the team is delivering an on-time, on-budget process there. So we are quite happy and enthused about what's going to be our 5th mine next year, right? We expect to see first gold in mid-2023. We have, of course, by now, all major contracts signed. I was in Ivory Coast a month and a half ago, and I had the opportunity to join the team on a launch with our mine contractor, who's already mobilizing. We have over 90% of excavations of the project completed. We We are around 70% complete with the placement of concrete. We initiated this month of August the erection of steel structures. We
Okay.
have key equipment on site already, and more equipment arriving on time. No delays that we see there, or power station transformers are all on site and mounted. So, you know, the project is advancing really well. I'm very happy. And I can only praise a good, strong construction team that's doing a great delivery.
Yeah, well, and I want to point out, I followed your company for a number of years now, and actually Rick Rule said this as well. You have a track record, and your management team has a track record of delivering on what you promised. So it's great to see that that's you know, appears at least so far to be the case with Seguela. What kind of range are you looking at for all-in sustaining cost at Seguela?
Around, yeah, it's the initial years is the cost profile is linear on the first years, but it's around $900-800.
Oh,
well
okay.
below $1,000.
Okay.
Yeah.
So,
It's a flagship asset with long life of reserves, and we continue making discoveries.
right.
I mean, the main driver for us to get so you know, in love with the Roxgold story and the venturing into West Africa was driven by the potential growth opportunities that we identified early on in Seguela. No, just, I mean, the Roxgold team already had a clear view of what Seguela could become, and we were able to concur with that view very quickly and get excited about it. That's why throughout the construction, you see many times companies slowing down or paring down on exploration.
Right.
No, while we're building, we're exploring aggressively. And as a proof of that, we, a couple months ago, we just published the maiden resource for a new discovery called Sunbird, where we reported 350,000 ounces of inferred ounces of gold. Those ounces are not part of our mine plans yet. Those are recent discovery, still in inferred category. But you know what? It's still growing. We're continue drilling extensions of that, and we look forward to update our estimates towards year end, because, you know, and we have 40 properties, 40 prospects within a 30-kilometer stretch of the productive rocks where Seguela is. We control 30 kilometers. We have a commanding land position over those Birimian greenstones that are so productive and host the Seguela deposit. Right?
So there could be more discoveries to come.
And we look forward to continue reporting on the success of our drilling, and
Right.
We're excited about the work that's being carried. And now it's a different type of deposit in the sense that we don't have one major deposit, like, for example, we do at Lindero in Argentina. You know, it's one large deposit.
Almost immediate, right?
Yeah, here we have multiple deposits. We currently have 5: Antena, Aguti, Kula, Ancien, and now Sunbird. So the biggest one is around 400,000 ounces, although I personally believe Sunbird will be the biggest. It's currently at around 350 and continues to show, you know, potential to grow. So, but that is just the nature of the deposit here. And I believe we will continue to grow like that with individual ore bodies that are probably in the range of, you know, 500,000 ounces plus minus. Perhaps we get one bigger or not, but
right.
You know, in that range. But all of this will be feeding a centralized mill, you know, which is what we're building, and we will source ore from these multiple mineralized centers that we have within our bigger property, which I said has a 30-kilometer stretch within the productive rocks.
Is that a hub and spoke type setup where you've got the mill as the center, and then you can pull ore from different properties?
Yeah. And that's how the mine is set up now. So no individual deposit is like, 2 million ounce or perhaps I'm not saying it cannot get there, but right now the configuration is, multiple deposits, 500,000 ounces, 250, 350, all of those feeding a centralized mill. So, that's just the nature of that deposit. And therefore, all the opportunities that it continues to present to us, because we have currently identified 40 prospects with gold that need to be tested within the 30 kilometers.
Did you say 40? Did you say
40?
40?
40.
Okay.
Yes. And I'm not saying that we're going to be able to generate resources and reserves in all of them, but clearly opportunities that need to be pursued. And Sunbird was one of those. The Sunbird, where we recently reported 350,000 ounces of new resources, it was one of those targets, right? And we have 40 of those. Now, again, many of those will not materialize into anything meaningful, but hopefully some will, just like Sunbird, right?
Right. And with all-in sustaining costs potentially under $1,000, could be a great cash flow generator.
Robust economics at that mine. Robust economics.
Yeah. So now I understand why you were so excited about and are so excited about the West African prospects and the merger.
It's a great place for mining.
Yeah,
it's a great place for mining. We're feeling very comfortable there.
Yeah.
We're well received.
Mm-hmm.
And to some, West Africa sounds like a remote, far and away place.
Right.
But mining has always been a frontier business, hasn't it? And we sometimes tend to forget that. But from the mining perspective, West Africa is a mature mining jurisdiction, really. You find Barrick, Newmont, AngloGold, B2 Gold, Endeavor Mining with a very successful business in the region. So, we feel very comfortable there and very welcomed by the national governments and the local neighbors in the areas where we work. So we're very happy.
Yeah, and I'm hearing more and more respected voices in the precious metal mining sector say that they are becoming very favorable towards mining in West Africa. Just people that are talking about basically exactly what you just said, that the governments are reasonable, the permitting time, the infrastructure's there, and the quality of the deposit. So it's great to hear.
Quality of deposits and the receptiveness of the governments towards mining and the development of responsible mining, right?
Right.
The ability to permit within reasonable times.
Yeah.
It's key as well, right?
Right.
I sometimes say, we would all love to have our gold deposits in the Walker Lane district, in Nevada or something. But you know what? The timing it gets to permit things and whatnot. I mean, every place has its challenges.
Sure.
In West Africa, I would say that you can effectively develop mines and operate at low cost and within reasonable time frames, right? So we feel very welcome.
Good. Yeah, I think the last thing I'd like to touch on, if you're okay with that, is I was actually looking through your Twitter feed earlier today, and I saw a couple of things that that indicated to me that Fortuna has a real impact, and I think a real positive impact in almost all ways on some of these remote areas, because you are diversified, right? You're in kind of remote West Africa, a remote part of Argentina, and I think even with Mexico, you're in a more remote part of Mexico, and then of course Peru. Can you touch on kind of your thoughts on the impact you have sometimes on these communities, some of the real positive things that happen?
Yeah, and I wouldn't say sometimes, no. I think we are very cognizant of the responsibility that developing a mine entails today. I was speaking with an investor, a few days ago, and he was asking me about, well, if prices come down, some, you can just shut down mines, no? He was asking me, and I was like, you know what? We have to be very careful with what type of assets we develop. And that concept of just turning on and turning off mines, because we are responsible to a lot of stakeholders. It's not just the taxes we pay and the investors we give returns to, but we're responsible to the environment at a time where we are all measured against heightened standards. We're responsible to our neighbors. We're responsible to our workforce. Most 44 or 45% of our global workforce comes from the immediate vicinity of our mines. Right? And those are places, as you mentioned, that we operate in places that are, for the most part, quite remote. So we are the only source of local employment or formal local employment with full benefits and training. And we give people the opportunity to get incorporated into a work environment that offers growth opportunities, training, competitive salaries, and then how we incorporate the local communities into our supply chains. No? I mean, the places where we operate, it's not like, we have down the road, there is another mine, or down the road, there is another a vehicle assemblage plant or a technology hub. We work in the middle of nowhere.
Right.
No?
So if you shut the mine off, you could be shutting off, was an extreme example, but food and,
You're impacting people. So we have to be very responsible with the type of assets we develop, and the long-term view that we have to take towards the development of those assets, right?
Right.
And that's our responsibility, and the responsibility to the environment, to our workforce, to our local communities, and that's not something we take lightly here, right? So, yeah, we touch people's lives, all the time, not just something, all the time. We're touching people's lives, people who don't have, other opportunities for work, or they have to migrate to find a job, and sometimes the conditions under which those people migrate are tragedies, right? Human tragedies. So, I mean, Fortuna employs close to 5,000 people worldwide today, and I'm very proud of the work we do there. And then each of those, that's 5,000 direct people between, Fortuna employees and contractors working at our operations. That's 5,000, and if we add, service providers, that are linked to our supply chains from local communities, that number multiplies times 5. So that's a responsibility we take very seriously.
Yeah, and as an investor, and I am an investor in your company, that is something that, number one, is great to hear, and that I just can sense that you are extremely genuine about that the company cares about the people and the lives that you're touching. So, well, I'm done with my questions, Jorge. Anything that I missed that you want to touch on before we wrap up?
No. I think we touched on the main themes. I mean, continue tuned and watching on the progress of our business and how we deliver Seguela over the coming months.
Yeah, I think I think Seguela could be real exciting next summer, especially when we have gold at 2,500 per ounce, right?
Yeah, we hope that, but I can tell you that again, my job is to have a business that can thrive under any price environment. Hopefully it will be higher.
Yeah. Well, and you've mentioned that before, and even in a challenging quarter like last quarter, and even potentially the way this quarter is shaping up with the price environment, that the company doesn't have a ton of debt, the balance sheet is in good shape, that you can survive and provide that long-term optionality to the higher metal prices. And the other thing I want to mention as well is I think Fortuna is really unique in that you offer a great deal of exposure to silver, but also a great deal of exposure to gold. I don't think the amount of exposure that the company has to gold has fully been recognized by the market, but I can't really think of any other mining company right now that offers such a balanced opportunity with both gold and silver.
Today, 70% of our revenue comes from gold, 68, 70%. 20%, 22% from silver. And then, we have a small byproduct from lead and zinc coming into the revenue. But yeah, we continue pursuing opportunities in silver, in Latin America, of course, in Mexico, Peru, and Argentina as well. Yeah, no, I mean, the business is well, the revenue mix is what it is, and we're happy.
Well, thank you, Jorge. I appreciate your time. I know my viewers appreciate hearing about the company. Many of them are stockholders in Fortuna as well. And I wish you continued success, and I hope we get to catch up with you again in another couple months.
Absolutely. Thank you for the opportunity, Ron, and great to see you.
Yeah, likewise. Thanks, Jorge.